Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, April 22nd, 2020. We'll look at the indexes and just probably keep it there. If I keep the indexes real short, I'll touch on some of the other trade ideas. But the big things that stood out to me today, a couple things. We bounced off support. We hit those support levels yesterday, bounced off those. I'm going to cover those on SPY, QQQ, NQ, and ES. So let's just look at that. Start out here with SPY, I'm sorry, QQQ. We're on a 60-minute chart. 202.29, very big level, big gold gap right there. A lot of reactions, not just recently. You want to always put a higher weighting into the recent reactions. Gaps should put a high weighting in your analysis, as far as support and resistance levels go. And so we hit that yesterday, and we had, the typical reaction. Reaction could come in the form of a consolidation, as it did yesterday on SPY and somewhat on QQQ, and/or a bounce. So today was a bounce. In fact, let's just look at that real quick. Going back here all the way to last week and even before, I was watching this bearish rising wedge pattern. This is the NQ 60-minute chart. This one was posted back on the 17th of April. That's Friday. And, the big level here was that solid trend line right there, that thicker trend line, and formed this rising wedge. And so what I want to make mention is, I know this is a recap. I've covered all this. We needed to break this wedge, which we did. And so each of these arrow breaks are levels that a reaction is likely if and when hit. And so today we hit this one right here, 83.29, or yesterday, and then we had a reaction, a bounce from there. So let's look at that. That was again Friday. You can go forward to the next chart that was posted on Monday here, the 20th. So we had broken down, and so we were consolidated. We back tested, and then needed to break 86.90. That level was there too. So that's how it works. And so had us going down here at 83.29. I don't draw all the up arrows, but again, those are where you're going to get either a consolidation or a bounce, and that's all we had today. In fact, let's flip forward to the most recent charts. This was posted a little bit before the close. I wanted to give everybody a heads up in time if you want to, take a quick trade or anything. So this morning we had. Let's try to do that again. Let's zoom in and pan over. We had these, two scenarios. It's, pretty much said, look, well, if we get a sell signal, if we break that, you could short here on the back test and/or short up if we run up to the push all the way up to the 86.90 resistance level. And then in that video later on, I added in the video earlier today, I added this trend line. So this chart was posted this afternoon. That was 3:07 p.m. So plenty of time before the close, and there's that downtrend line that was added in the video right there. At the time, I said it was a potential trend line, or I did in the follow-up comment section below this post. So we rallied there, and again, so there's that. Going back to a week ago, had us breaking this wedge, which we did, breaking that support for the next sell signal, which we did. We didn't have much of a reaction off of 84.85 because at the same time we took out both the trend line in 84.85 with an impulsive move. So you don't always get reactions there. There's an example, but we certainly got one on the 83.29 level again, going back all the way to last week right here, and again on Monday right there at the 83.29. So that's where we're at, and well, no, that's not where we're at. That's where we were before the close. Pointed out that's a if like I said, the problem earlier is that with trend line back tests, you can continue to back test or take out a trend line. So really your sell signal comes. It's an objective short, but you get a better sell signal if you get an impulsive rejection after a back test, and of course, and it still stands a break of that trend line or the 80 and the 84.85 level right there. So again, I said in that post, I'd put it's better than 70% odds that we get a reaction, because that is a big level. Let's starts right here. Resistance, resistance, broke above it, bullish, rallied, back tested, back tested, back tested. Finally gave it up on an impulsive breakdown, and then back tested from below. And so look at all those reactions to help validate that. So you have not one resistance level, price resistance, but also two, downtrend. And as I said again in the comments section below this post, I added that, hey, it's a potential downtrend line, and this is just me. It's not textbooks. This is my rule for a trend line. It takes 3 distinct reactions to validate a trend line, because any 2 points could be connected at random. But I figured because it was well watched, usually when you get highs like this and you start a new downtrend, you get a breakdown, you form a trend line early on and you come and back test it. So I said that, the usefulness is you can short rallies to that level, and if you're bullish, you can wait for a solid break above. You could also use a solid break above, especially a 60-minute close, to use as a stop on a short trade, or a bull and look for a breakout there and rally up here to the 88.31 level. And if that goes, then you've got the recent highs as your next potential target or resistance level there. So I made clear, better than 70% chance we'll get this. And so far that's pretty much what we've had. Here's that NQ 60-minute chart, live chart, and you can see right before the close, so, we hit it, hit both those levels and reverse. It doesn't look like a lot there. You really have to zoom in, but it's about it's better than a 0.6, at least a 0.6% drop from that little spike above. We had just a quick spike on the 1 minute. If you take a look at the 1 minute chart here, let me show you what that looks like. 1 minute candle, see right there. So that was just a quick pop, but that's pretty much where we stalled out. And then from there, even from that high right there, Q's dropped. What is that? Actually closer to 1%. That's 0.9. So almost a 1% drop off that level. You get a quarter point on just a single contract to NQ, you're doing well. And remember, guys, futures aren't your thing. I should have said it on the home page. It goes without saying. If I have a short entry on NQ, and even though it was unofficial, it's the same as QQQ. You could short the Qs at the close. I'm just going to track this, and traders out on the West Coast or overseas, can trade these things throughout the evening into tomorrow, or whatever, all night in the U.S. here, or whatever hours you're at overseas. And QQQ, you can only trade up to the after hours. It starts getting thinner later in the day. Oh, and I want to talk about that. It's a good point on volume. But so there's a drop, nothing at all to write home about yet. But what it does do is give us that third confirming reaction, because that is most certainly a reaction right there. It's not the biggest reaction so far, about almost a 1% pullback, but like I said, objective level to short. PPO is trying to cross back over there, and so our next, although that's an objective short entry, that's not the same as a sell signal. A sell signal will come if we can break this minor trend line right here. And then, of course, the support levels below it right there. So that's it. We have this little kind of triangle pattern we're pushing up here. Now we do have confirmation with a third reaction, so there's a downtrend to watch and trade off of. Got a couple tech stocks, some semis reporting after the bell tonight. We'll maybe take a look at those before I wrap up the video. And let's look at a couple other things here. ES, really no change there on the ES. We mentioned yesterday's video, we had a little minor downtrend line here that if it popped, it might lead to a near-term rally, which we have. You have this trend line up here and that 828, 19, 50-ish resistance right there. So very minimal upside before ES runs into big resistance if we do get another pop-up in the futures tonight or sometime tomorrow. Otherwise, if we can't get there, or even if we do get there, regardless of whether we get there or not, if we reverse off that level, then you have this minor downtrend line, which QQQ is, or ES, I'm sorry, S&P 500 futures have been crawling up. Look how well defined that is. Just a lot of every candle, pretty much every last, these are all hourly candles, and they've all been riding right up this trend line. So certainly one to watch. And remember, it's a little bit different. That breaks first, and then you have the NQ trend line that's just still a little bit below, quite a few, but those are levels to watch. To just jump over to the charts of the indexes. So that back test of that trend line on NQ and the price resistance level that it coincided with, it came in perfectly with that 212.32. Remember, this has been on this chart for a while here, 60-minute chart. Was minor resistance. We gapped below it that helped to validate that as an important level, and kicked back to it to back test, and that's it. So like I said, this is simple stuff. I cannot in any way, shape, or form guarantee that we reverse here, but I can tell you it's about as objective as you get. We had a rising wedge breakdown, which gave us a sell signal in QQQ recently. We also had some sell signals on SPY. We've had a first leg down and what appears at this point to be a kickback rally right back into resistance. And that was, again, the thing that kind of got this thing going. The breakdown of the wedge really didn't do the trick because we traded sideways, but it was that breakdown of 212.32. And that's it. Simple stuff. If it doesn't play out that way, you don't let it run up here if you short right here. And if you are a bull, you want to see that level get taken out, all these levels and those previous highs there. You also want to watch for this PPO signal line right here, the white line, the dotted line, telling you since this point, that was a little whipsaw pretty much since here, that the trend has been bullish when it trades above the zero line right here. Bullish trend, bearish trend. So we're kind of at a crossroads right now where bears really need to see this. Bulls want to see this because that's going to help. Not only determine price-wise, the near-term bullish or bearish, firm up the bearish case or firm up the near-term bullish case, but it's also going to have the potential to keep this trend indicator either bearish because it recently crossed. If you look really close, we're down there. We did have a bearish cross on that line, and it looks like it's coming to close to back testing from below. So those are some of the things I'm watching. And SPY, and then I want to talk to you about volume real quick. SPY, same story. I covered it yesterday. Today we had a reaction all day yesterday on that key 273.39. That reaction has carried through today in the form of a bounce back to a little bit below. There's that gap right there, big old gap right there, big old gap there, and we almost backfilled it all the way up to 281.41. Not quite all the way. So just like ES I showed you earlier, there is a potential for a little more upside before SPY and ES, the S&P 500 futures, hit some pretty significant resistance, both price resistance and that trendline resistance. Okay, somebody on the home page under one of the comment sections asked me about volume the other day. I don't talk about it much. My reply was, look, many years back, I used to use a lot more. It was a big thing. It's always been historically a big thing in technical analysis, but I found in recent years it seemed to mean less and less. I'd see big volume days. Or big moves in the market that went on low volume, looked like a sign of non-confirmation, yet the market continued to rally. I don't know where the stats are now. Almost 10 years ago, 5, 6, 8, 7 years ago, I remember reading that they attributed about nearly 70% of all trading volume in the market on a given day was due to high-frequency trading. If you don't know what high-frequency trading is, these are programs that they're not investing, they're not swing trading even. They're just jumping in front of your order, the order flow, and they actually buy it from brokers like TD Ameritrade and others like that sell the order flow. And so if you're putting an order to buy 300 shares of SPY, they will in milliseconds jump in front, buy it, turn on, flip it, and they're just scalping pennies, little tiny bits at a time, in and out, in and out, in and out, hundreds, thousands of times a day. But again, they're not holding for anything more than milliseconds. That's high frequency trading. And so again, it counts for a lot of it. So I think my theory is it's skewed a lot of that. Now, overall, what I do look for, I do incorporate volume. I look for it on breakouts of chart patterns to confirm. You want to see a breakout, ideally on impulsive buying if it's a bullish breakout, or a breakdown to the downside, impulsive selling. And ideally breakouts, I've always maintained breakouts that occur on 1.5 times or better, so 150% or better of the average volume. Most charting programs will give you that. Every charting program will give you just have to find it. This one, you have it at different places. There's a volume surge number, 1-day volume right here, 90-day volume. That's the 90-day average volume. So for example, over the last 90 days, SPY has averaged 138 million shares traded. And so where volume comes into play is, a day like today, pretty good move, 2.2%. And I don't try to read too much into it. Let me go back here and increase these volume bars. But I do want to point out what I noticed today, because I have on my watch list, I was looking at the FAANGs and the volume buzz. That's something TC2000 will give you, the volume surge or the buzz was really low. So volume on all these stocks that were up big that lifted the markets were low. And you can just look at it here. I'm going to put crosshairs at the top of today's volume bar. And what that's telling you, today was the lowest volume in SPY that we've had since this whole thing started, bar none, no exceptions. Lowest volume since all the way back here before the market started cratering, right there at the top. Again, I'll put the crosshairs there. You can do it yourself. So QQQ, same story right there, right, really about tied with the other day right there. But again, so we had a pretty good lift. You can see that yesterday's selling volume. Usually you are going to see more. I will say this, not to try to skew what I'm trying to, the point I'm trying to make. Typically on down days, you're going to see more volumes. You can just have to factor that in, especially during big sell-offs like this. But again, on the up days, at least to see normal volume today, average would help to confirm that. But you're looking at, like I showed you on SPY, the lowest volume, and we're really tied right now with the looks like close to it with Monday for the lowest volume since before the whole thing started, right back here on that was the market all-time high back on February 19th. So take it for what it's worth. Same story among all the big names here. I'll go through those real quick. Microsoft, lowest volume since the top. Apple, lowest volume since the top. And you can go down the line. The only one that had high volume today was Facebook. And when I'm talking today, I'm talking about the FAANGs. Google was okay. Alphabet was okay. Facebook had some high volume. But again, the biggest names out there, Microsoft, the ones that have the highest weighting on the index, Microsoft, Apple, and Amazon, really low volume, sign of non-confirmation. So take it for what it's worth. Doesn't mean you go short the farm. It's just you take today's move with a grain of salt because it was not, the buyers weren't really behind it. The market kind of just drifted higher, more so probably on a lack of sellers today. That's what that's telling me. Okay, let's see how the two big semis that reported tonight after the bell are doing. First one is Xilinx, XLNX. Closed right around here. You can make this out. This shaded area, these are the after-hour trades. So we closed here, and the stock is currently down. Well, it's moving around. Don't take too much of it, but it's down. It's got knocked down about 3%. Where it goes, nobody knows, but we can take a look here. This is a common theme I have. I'm going to go through this in a second. We have these uptrend lines in the market. So far holding above trend in the after-hour session. This chart should be, yeah, it is reflecting after-hour trades through today, but that's a level to watch, and that's Xilinx. You guys know my thoughts on the semiconductors. The other big one is Lam Research, LRCX. They reported tonight, and let's see how they're doing right now. Nice little smackdown in the after-hour session. So, again, remember, we are just entering earnings season. The semis are just starting to report. The 800-pound gorilla in the room, Intel, reports tomorrow night. So strap on and hold on to your, semi or tech or stock market positions, because again, you might say, oh, I don't trade tech, it's too volatile. Well, it's the largest by far sector of the S&P 500 at a 25% weighting. It is even larger. It's about half of the NASDAQ 100. So tech is everything, and the semis are really the kind of the canary in the coal mine on tech. So there's Lam Research. Again, I don't read too much into the immediate reaction on an earnings report, because that's part one of three. Part one is what the earnings are. Instantly, the algos as well as humans will try to parse the data and interpret what it means. Then the company will come out, do their conference call. Most companies aren't giving guidance now, so really you're not going to probably get much there from them. And then finally, what happens tomorrow at 9:30 a.m. when all the players, institutional traders, everybody step on the field. So we'll watch these two along with the semiconductor sector, and like everything else, you have these trend lines off the lows. That's what you want to watch. You have trend indicators that are still bearish, like this PPO signal line said bull market and Lam Research or bull trend, be long. The only bearish trend that, again, the 90 MA was giving you is right here. It got you out. You might not have made a lot on a short, but you sidestepped a consolidation range. But throughout Going back for the last couple of years, it's identified the trend was bullish until this point right here, said it's bearish, and it's still telling you it's bearish with that PPO coming to back test the zero line from below. So where we go from here, I think, is important. If this stock can hold this trend line, continue up, we're going to cross, flip this trend indicator to bullish. Otherwise, we get a rejection here because this zero line often acts as support or resistance when tested from above or below. So a break of the trend line, and that I haven't really updated this chart in a while. That's not a don't put too much into that 241-ish level. It is support. We have a reaction low there, but it's I don't see any very yeah, you know what? I had that line there for a reason. I guess there was a big level back here, so it is important or significant, I should say. And so that's what we want to watch on Lam Research. But the bottom line is these companies have topped. Most of these semis, just about everything is topped, and we're really stretching, or recently we're stretching the upper limits of what an ideal bear market rally should look like. So market can power on up. It starts to chip away at the bearish case. We're far from eliminating it, but the more we go, the more it chips away at the bearish case, if that makes sense. And then to just wrap up, I already covered the very long-term picture in the earlier video today, covering monthly charts, trend indicators, trend lines, things like that. And a little bit longer because sometimes I've spent a lot of time in the world of the 60-minute charts, but here's a daily chart. And this is kind of the bigger picture for SPY and a lot of other things out there. PPO trend indicator, just like the last stock I showed you, is still on a sell signal, at least, again, one trend indicator. Doesn't mean everything is, but that's for the daily trend. It's a longer-term trend than short-term trend indicators are bullish right now. Intermediate and longer term are bearish, and that's back testing. And again, you can look at go back in time in history, and you'll see that does a pretty good job of capturing the PPO 9EMA of telling you when the trends are bearish or bullish. And so bearish for now, plus we had a big rising wedge here on SPY and a lot of other stocks that have broken down and broke down yesterday, giving us a sell signal below there, and we're still below it, keeping that sell signal intact. QQQ is another story. It's very tech heavy. When I look at the daily chart, we see the PPO has flipped back over to into above the zero line, bullish territory, and we're still above the trend. You can see there's the bottom of there's a candle right here. That trend line comes off that low, the multi-year lows right there on the 23rd of March, and we're still above it. So there's kind of a mixed signal, but again, it's the theme that I've been talking about. Tech has been holding this market up, kind of leading the way, and we have the big techs coming up. Let's talk about that, and then we'll wrap this video up. Let's look at the big components of the NASDAQ 100 and show you what I see here. I'll mark up some of these charts as I go here. Might not have levels. It's kind of, again, a common theme. You can see these trend lines off the recent lows right there. Microsoft has just recently, it broke down yesterday. It's below that trend. Earnings coming up April 29th. So here's one. This will certainly move the market, whatever they say and report. So let's see what happens there. That's the largest component. That's a $1.3 trillion, largest publicly traded company other than maybe Saudi Aramco. I don't know where they're at, but at least in the U.S. And the second largest is Apple at $1.2 trillion. And Apple broke down this, this trend line's not super well defined. I won't put a high weighting on it because I don't have a lot of reactions, but it fits with what's going on in a lot of the stocks in the market, and looks like an impulsive breakdown, a back test. Impulsive breakdown yesterday, that is, back test. They report on April 28th. So here's the theme, guys. You have just a few more days up until next week, and you're going to have the market-leading FAANG stocks, FAAMG, those ones I'm covering, reporting earnings. So hang in and strap on, because we'll probably see some volatility, and I think that may have the potential to make or break the next trend. Maybe it's going to take us up even higher if they just post blowout quarters and any of these companies happen to give rosy guidance. Maybe not. The most important thing, regardless of what they report or what they may or may not say on their conference call, the most important thing is the market's reaction to what they report or what they say. Because I've seen time and time again, I saw it here at Apple, have blowout record quarters only to top. I saw that back in 2015. Actually, it was April 28th. I remember the date. And I marked it, and we put it as a short trade back then, or I highlighted it. That was, you can go back here. Let's see if this chart will do it. Yeah, there it was, April, back here in April. I think it was, yeah, that's it. That divergent high, you won't see it well on here. I'd have to zoom in. Uh, it was April 28th, 2015, blowout quarter, put the stock at new all-time highs, and after hours, and they faded it, and that was followed with a 31% correction back then. So just keep that in mind. Again, what's my point? Well, again, I remembered at the time, analysts were drooling all over themselves, buy, 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 great company. And what happened is it is a great company, but sometimes stock prices get ahead, and then all the good news is already priced in. So again, my takeaway, and I've seen it likewise. I've seen companies come out and report an abysmal quarter, horrible guidance, but yet the stock rallies, and that's usually after an extended downtrend. So again, it's more important how the stock acts after earnings than what the earnings are or what the company says. That's the takeaway there. A couple more. Amazon. April 30th. So you get the theme here. Next week's going to be a the biggest week for earnings. These companies dwarf. We already had the financials report, the world's largest banks, but these companies dwarf those banks both in market cap and the percentage weighting that they have on the S&P 500 and the Nasdaq 100. So this is what it's going to be all about next week. And here's Amazon. Everybody loves it. Gosh, shoot myself for not buying it, but I pointed it out on a video right here as one of the better looking stocks. I said, look, it's objective long here. Once it's 616, it's support. I said people are going to be ordering more online. Shame on me for not adding it, and I'll tell you what, I probably would have sold it 10 times over even if I did buy it there. But now, where I'm going with this is, I think now let's see what happened with Netflix. I'm wondering where they ended up today. I didn't even look after this morning. Look, there's a sell the news thing. They doubled. They exploded the quarter, blew it out of the water, had twice the subscribers they expected, new subscribers, and they already had a huge number. And what happened? They sold the stock. So there's an example. And I didn't parse through all the data. I just skimmed that one headline. So here's one where it's kind of by the rumor, right? Everybody knew that. Everybody knew everybody was sitting at home subscribing to Netflix if they didn't already have it. And so now with the market saying, okay, well, where you go from here? That was priced in. That whole move off the bottom right here when everything sold off, that 55% run in just a few weeks. Yeah, you know what? That big pop was probably priced in. And more so, what are they going to do going forward? What if coronavirus just kind of goes away? What if it's seasonal like the flu? Everybody starts running around again. They're going to see a big drop off in subscriptions. And so again, it's just the kind of the takeaway there is blowout quarter, and yet the stock ended the day down 3% after reporting. So we'll see what happens with these other guys next week. Where was I? QQQ. I was on Amazon. Oh, so with Amazon, yeah, of course, sales are going to be up. Everybody was buying everything they could through there. But there's also other things involved. Amazon, having to deal with personnel, people calling in sick or, actually sick. They had to hire a lot of new workers to help, kind of keep up with the flow. So their sales went up, but it might be offset by a pretty good amount of expenses or not. And if or not, then what I'm talking about is just like Netflix. All right, so how much of the boon to Amazon from this whole coronavirus thing has been priced in with that 50% rally over the last 1.1 months? Okay, so there it is. So these are the things that could affect where the market's going. Usually stocks kind of go into a holding pattern right before earnings. Anything's possible, but we'll probably see those things hold up. Who knows? Maybe not. Sometimes you see profit taking before that. People longs get nervous. I mean, heck, if I happen to pulled the trigger at 616 and I happen to hold it all the way here, I could tell you this: I would be selling before earnings. I would be taking my 50%. Bulls make money, bears make money, pigs get slaughtered, and I'd be not wanting to hold that, because if you hold into earnings, you really can't get out in time. Once they report, once the market's moving, you can't put stop loss orders in the after hours session. They don't work. You have to use a limit order, so you're really kind of at the mercy of best thing to do, I think, is if you have Amazon, take profits. It's not going to go up another 50% from here over the next month like it did there. That's my take. All right, and finally, the rest of them, April 28th, again, that's a common theme. This is Alphabet. We have two share classes, A and B. This is Class A. And that's it. So not much more else to add. A lot of these kind of stocks are walking up these steep trend lines. Most of them at a confluence of, I don't know if you can make out the moving averages there. Alphabet so far has stalled out at the intersecting 200-day exponential moving average and 200-day simple moving average. They're on my chart. They're probably hard to make out in the video. They're here, blue and red lines. And the 50-day is there as well. So that's it. We'll see what happens. And then the big one is, I'm going to put a line here for Facebook, kind of showing you this. A lot of these guys are kind of walking up a very steep trend line, wedge type pattern. Some of them haven't broken down yet. Some have. And then you have Intel, again, up big today, but from a technical perspective, it looks like it broke down yesterday, an impulsive breakdown, rallied back today, and they're going to report tomorrow night. So stock will probably flounder around, and then come Friday, this thing's going to go one way or the other. So we'll just have to wait and see. All right, let's wrap it up here. Get it out to you in under 30 minutes. This has been Randy Finney with Right Side of the Chart. Have a great evening.